Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the attention is on identifying and avoiding Ponzi schemes. Due to the recent numerous news on investors falling victim to investment fraud in form of Ponzi schemes and multi-level marketing, we thought it's pertinent to discuss some of the ways you can identify and avoid investing in Ponzi schemes. Nigerians have lost billions of naira to different forms of investment frauds in recent times. A Ponzi scheme is a type of investment fraud. Ponzi scheme is a pyramid scheme that operates on the basis of robbing Peter to pay Paul. Simply put, it functions by paying previous investors the promised returns from the funds received from the new investors. This is the oldest and most common type of investment frauds. Some of the warning signs to look out for to avoid Ponzi schemes include 1. Unusually high investment returns. Any investment that has a guaranteed return that is significantly higher than the interest rate on fixed income instruments or any conventional investment opportunity should be cautiously examined. Investors can use the return on government's treasury bills or corporate commercial papers as benchmark. When you are offered placement or fixed deposits at interest rates significantly higher than your bank, you should be careful and ask more questions. When doing the comparison, please ensure the returns are like for like, either monthly versus monthly or annual versus annual. For instance, an investment scheme offering 10% monthly or 50% biannually is promising 120% and 100% return annually respectively. Remember the adage, if it's too good to be true, it probably is. You need to ask questions like, where do you invest the funds? 2. Guaranteed returns. Beyond the unreasonable high returns, if an investment promises a guaranteed return outside the conventional investments like fixed income instruments, then you should be wary of this type of investment. Unless you invest directly in fixed income instruments like treasury bills, commercial paper, bonds, or placement with banks and reputable firms, then no investment should guarantee returns. It is good to note that the returns on mutual funds are not guaranteed, and the Securities and Exchange Commission (SEC) prohibits this. The portfolio manager only works towards delivering an impressive return. Also, the payment of the returns for fraudulent schemes are more frequent, daily, weekly, monthly, than the traditional investments. Greed is your greatest enemy when investing. 3. Unregistered investments and unlicensed firms. In most cases, investment products sold by fraudulent investment outfits are not registered with the SEC. This is against the SEC rule that requires that any investment sold to the public should be registered with the agency. Also, these companies are not licensed or regulated by the CBN and the SEC. Before you make any investment, you can confirm their status on the CBN or SEC website, as anyone starting a business can register with the Corporate Affairs Commission (CAC). This will significantly minimize your risk of falling prey to Ponzi schemes. 4. Ambiguous business model. The rule of the thumb is that if you do not understand how a company generates income after 5 minutes of explanation, stay away from it. Most investment frauds use complex business models that confuse investors. 5. Pressure to reinvest or get new investors. Most Ponzi schemes cannot survive without new investors or new funds. Hence, the structure will either promise existing investors a return to introduce new investors or promise to give a higher rate to prevent you from taking out your funds. The scheme breaks down when new funds stop flowing and several investors want to cash out simultaneously. 6. Excessive short-term focus. As investors, we must understand that we cannot cheat time because short-term returns are often low. Seeking exceedingly high returns in the short term exposes investors to fraudulent schemes The key to unlocking sustainable wealth is disciplined long-term investing that enables risk-taking on investments with a long history of performance. Kindly listen to the various investment opportunities on the YouTube channel. Thank you for listening. Please join us same time next week for another exciting and insightful session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 070-8246-3747. Stay blessed.